Hi, Tom Lydon here in Chicago at the Morningstar ETF Conference. I'm here with Abby Woodham, who's the ETF Strategist at Deutsche Asset Management. Great seeing you, Abby.
Great to see you as well.
Let's talk about smart beta, because everybody's talking about smart beta. With all the money that's gone into pure beta strategies, it seems that investors and advisors are a little bit fearful about volatility that might be coming down the road. How can smart beta help?
Sure. It makes sense that that would be a concern that advisors had. It's been quite some time since we had a significant pullback in the U.S. market, and so they're concerned, when is that coming and how do we construct our portfolios to handle that? And so this is actually a place where multi-factor investing can do really well, because we don't want to try to time the market. We don't want to say, I think the downturn's coming in a month, and so we're going to take cash off the table. You want to have market exposure, but protect towards the downside. And so a multi-factor strategy can have low volatility exposure. It can have high quality exposure. These are things that can help cushion to the downside.
Right. So as opposed to a single factor, you folks have approached it by having multi-factors. But there are a lot of multi-factor strategies that are out there. How does Deutsche Asset Management do it a little bit differently?
Sure. So something that we wanted to be very sure not to do was end up with ostensibly a multi-factor ETF that doesn't actually have a lot of factor exposure. And you can imagine, if you're selecting stocks that hopefully have exposure to 2, 3, 4, 5 factors, a stock that is small in size is not necessarily cheap or high quality. And so a lot of multi-factor ETFs don't actually have a lot of factor exposure. But what our strategy does is we try to look for stocks that do have exposure to all 5 of our factors, and so we do have a lot of factor exposure.
So there's a lot of strategies out there, kind of quasi-factor strategies, let's say?
Yeah, so they're not squeezing all the juice out of the strategy, so to speak.
Good. So from your standpoint, it's important, if you're going to go factor, or if you're going to go multi-factor, you got to go all in, or it's not going to be as effective.
Exactly. You want a strategy that has a lot of factor exposure. If you want to dial that down, you can do so by allocating to a pure market beta ETF as well.
Right, absolutely. Excellent. I learned a lot today, Abby. Thank you very much.
Thanks for having me.